Good evening, dear traders and those who consider whether to join their life with the trading with the financial markets. My name is Alice Lind, and today, together with Finmax, I'm going to host for you the series of the webinars devoted to the market analysis and devoted to the trading itself. So I have planned this series for this month devoted to the analysis of the candlesticks, uh, the notion of the candlestick, how to understand them, how to read them, and we are going to proceed from the easiest about the candles themselves, Japanese candles, up to the difficult candlestick patterns that are used by some traders in order to analyze the market. I would like to mention that myself I'm also using the analysis of the candlestick patterns because I have considered that to be one of the most suitable approaches for me in order to be able to analyze the market and to analyze the possibility of the further movement. So let's start. And also, I would like to mind that this webinar is only for the demonstrational purposes and it's not suitable for the copy trading. We are showing the concept of trading, and any trade that is going to be opened, it shouldn't be considered as trading advice or signal. Please remember that you're doing everything on your own decision. So the candlestick. Uh, for us on the chart we see the market price for the asset, and it's only digits. It's only set of digits. On this chart, on the trading view, here on the other sources where you are getting the information from, it's only digits. And it can change several times per minute or even per second. So for us, it's important to understand and to have the method of how we can put trade and reflect the price, the movement of the price on some picture that we can analyze, that we can have a look at, that we can print, that we can copy, that we can try to make an analysis from. And of course we need to have the method of the price analysis within different time frames. So the time frame, the notion of the time frame, probably most of you already know, but I will mention a bit about that a bit later. So for those two things we need the method to reflect the price change and to see this price change, to be able to get back in the past for a day, for a week, for years, and be able to analyze, to see what has happened before, to see the historic picture of what's going on or what was going on within the some time frame. So what is the time frame itself? So basically this is the period of time. Easy, right? We have different time frames, like different approaches to use those time frame. We have short time frames like 1 minute, 5 minutes, it's all time frames. Week, it's a time frame, and so on. And these time frames on the platform, these expiry prices, they can also be called like a time frames, because like up to 5 minutes time frame you call these trading like the turbo options. Up to the end of the day, the time frame, it should be called like the midday or intraday trading, and everything that is which time frame or expiry is tomorrow plus, it's a long-term trading, considered to be the long-term trading. Okay, So, about the candlestick themselves, basically, we need to thank to that. It's easy to guess, to Japan and to the rice traders. And in the 16th century in the Japan, there was no basically some tool or some single currency like the euro that could be used for buying or selling. So the rice, the most widespread product and the most popular product was used in order to collect taxes, in order to to pay for something and so on. So they were collected. The rice was collected in warehouses, and some rice receipts were using, and rice stocks also were used as a medium for exchange of buying and selling something. So basically, it was called the empty rice contract because physically you were not buying something, but you all owned a paper that proved that you have some amount of rice, and you could use this paper in order to uh, you could use this contract. Paper is not the word. You could use these contracts in order to exchange them for something. And well, basically, it was the first futures. So the future market has started in Japan in 16th century. Pretty, pretty interesting. And one of the rice sellers, who was called Honma Munesia, I'm sorry if I mispronounce it, he was considered to be the founder of those candlestick patterns, and he was one of those who thought, maybe I can like use these strange figures, these candles, in order to say something. Maybe if I get back to the past, if I look in the past, I may predict something that will happen in the future. And basically, he was considered the one who had like 100 consecutive winning in the row, and he became the legendary rice trader. So due to this success, due to the fact that he was so obsessed with trying to predict with this analysis, right now we can use those beautiful candlesticks and different patterns with the candles, with the Japanese candles. And and the person who brought this way of reflection of the market prices from Japan to the United States stock market was the Steve Nissan, I'm sorry. And in further webinars, I'm going to use some information from his books, from his studies. I'm going to use some information from the books of Gregory Morris, like Japanese Candles, really popular book about the candlesticks, about their patterns, about the way how traders should use them, how they can understand them. Wonderful books. I do recommend you to read them and to see what you can use. But also in these webinars you will have also a lot of information from those books, from many other articles, from my own experience as a trader, and I'm going to share that with you, like this information, the most important, the most interesting that I took from those books, and the facts about the market, the analysis of the market thanks to the Japanese candles. So let's have a bit closer look to the Japanese candles themselves. I will show you. Of course, most of you already know that, but it may be useful information for those who are making the first steps. And also worth mentioning the fact of how the prices were reflected before the candles. So we still have that. It's line of view, so simple, and the bars, yeah, almost the same, but a bit different perception. So you see these and the candlesticks that most of you are used to. Candles, Japanese candles, were considered to be one of the most um, easy and the most informative way of reflection market price. So right now I'm going to explain you why. So as you see on this chart, this is by the way TradingView platform, TradingView chart with the candles. You see here the panel with the assets that mostly I'm using. So this is my assets, and right now let's see on the example of the Euro USD candlestick chart. So here, for those who doesn't know, for those who don't know, we have like candles. Each line on this picture is called a candle, and you see that they have two different colors, like green one and red one. So the green one, they usually called the bullish candles, or the candles that show the growth. And I'm sorry, and the red one, they reflect, they show the drop of the price. So basically, they are called the bearish candle. So all of you have heard about the bull and the bear, the symbols of the stock exchanges, of the traders, of the markets, and so on. So bearish and bullish candles we also have on the chart, on the market, as well as bearish market movement, bearish patterns, and so on. So what is the difference between those two candles and why those candles are so popular? So first of all, let's see what information it shows us. So right now we have the time frame. The time frame is 1 minute. You can see it over here. 1 minute. You can change it for any else that is offered. So let's say you want to analyze the market like for today, and you select 1 hour time frame. What does it mean? 1H, you see here. So it means that each candle, each line on the chart will represent the change of price within 1 hour. If we change it to 4 hours, it's going to reflect the price change within 4 hours. Okay? The same with 1 minute. Or 5 minutes. If I switch it to 5 minutes, we will see the price change within 5 minutes. Below, you can see the time, also that the time frame, and you see that if you put your mouse over here, you will see what time this candle belongs to. So we know that it belongs to the 10 to 2 p.m. Time frame today, 8th of January. So the following, the last candle on the chart shows the current price change. So we see what is going on right now. So, and here we have the time left till the expiry of this candle. I will explain you a bit later why it's important and how to use it together with the Finmax platform. So the candle. let's change it for 1 week. So below we see the dates, right? And here we have the scale for the price. So basically we can see here how the price for the euro to dollar has changed within 1 week. So we can say that it went up because the candle here is green one. So how we shall read it? The in case the candle is green one, the price of opening will be here on the thick part of the candles or the body. This part of the candle filled with color is called body, and it shows us the close time and opening price of the candle. These lines above and below the body of the candle, everything here is the candle, and these lines, they are called shadows or tails or wicks, but the most popular variant is of course the shadow. So in case the candle is green one or blue one on some charts, you know that the opening price was over here on the bottom of the body of this candle, and the close time, the close price was here on the top of the body of this candle. The maximum price was over here, and the minimum price was on the lower part of the candle's tail. So this candle doesn't have the tail, so this one has it. So we know that this is the lowest price of this candle. So within 1 week we know that the price, let's say the previous week, within the previous week the price of euro to American dollar went down, but within this period someday it may went up to this price and fell down up to this price. But the week has started with this price and has ended with this price. This week that we have right now has started with this price and has started with this price. So pretty simple. The easiest way to see without calculation everything, without like peeping to the right part of the scale, on the top over here you can see the digits that reflects the important information about the candle. So opening price, so basically if I put my mouse over here, I will see the opening price of the candle, the high of this candle, the low of this candle, and the price when of this candle when it was closed. Well, this candle is still active, but anyway. And global information of how the price has changed. So we can see that within 1 week the price has went up for 51 pip or 518 micropips. So it's pretty okay. So the price when the candle was opened and the price when the candle was closed. And when we are talking about the bearish candles, the candles that are showing us the drop, it's vice versa. So here the opening price will be over here and the price when the candle has closed over here. So it means that the previous week has started on this price and has ended on this price, and within that period of time it went up to this level and went down to this level. So if we get back to the past, we may see that there were weeks within which there was great price fluctuations, and there were weeks like here that the price didn't change much. So it also reflects us and shows us important feature of these candles, why the candle are so good and why most traders they select them. because basically candles that we have, they represent the mood of the market, the mood of the buyers and sellers, market participants, their psychology. And that's really important, and that's really awesome about those patterns and those candles. That when somebody sees the pattern, he thinks, okay, this pattern tells me that the price is going to go up, so I shall buy. And he buys. And other trader also see that pattern and think, okay, the price is going up, so I need to buy. And he also buys. And due to that, this pushes the market up. And those patterns, they work partially because we do believe them to work. So the same with the size of the body. The smaller body is, it tells us about some indecision about the market participants, that bulls are pushing the price up, bears are pushing the price down, nobody can win, and the body of the candle is small. But for example, tails are huge. So it tells us about that the market participants, they can't understand what to do with that, and it usually happens before some really great push, some volatility on the market that gives us so much opportunities, and so much gives us an opportunity to collect a lot of pips, which is basically our profit. So we have spoke a bit about the history of those candles, a description of the candles, and like the chart itself, time frames and the charts. Those candles, they can be used for analysis for everything. Like they're used for currency pairs, they're used for the stock market, they're used for, let's say, the cryptocurrency, everything. So, and in the further webinars, we are going to discuss a bit more about them, and we are going to see what patterns we can use and implement in the trading. And as I promised, I'm going to show you a bit about the expiry of the candle and the platform of the Finmax. So let's say we have the 5 minutes time frame, okay, so to make it easy. And right now right here we see the time till the expiry of the trade, or of the candle. You need to understand, and you need to pay attention while trading on the Finmax's platform, that each expiry of each contract is binded to the straight time. So if we see right now that this expiry is offered for 1841, it means that the trade is going to be closed at 1841 straight, not in 60 seconds from the current second, but at 6041 straight. The same with the other time frames that we are offering. So here today, let's choose for example 2 minutes, we see that the trade is going to expire at 1842. So it means that it's a bit more than 2 minutes. So why it's important, and why it's great, and why it's simple and helps to trade and to understand the market price? Because you can always know, and you can always check the time frames and of your trade and the trade on the other independent sources. So for example, I'm checking some of my trades. Let's say this trade. I need to switch for Apple. So my trade for Apple has closed at 18 straight. So I'm opening I'm looking for the candle that is going to reflect 18 straight. So as I'm in Bulgaria, my time zone is GMT +2, and on this platform is GMT. So I need to search for 16:00. So if I want to check or to make market analysis, I need to know that, and I should know that the expiry is binded to this candle and to this part of this candle. So it makes trading on the platform really simple and really understandable when it deals to the expiries. You just need to get used to that, to use that in your trading to make analysis, taking that in the mind, and it will make your life really simple. So for today, really thank you for your attention. I hope you learned couple of the new things about the market. I'm not going to trade on those webinars. They are mostly educational, they are mostly for the knowledge. And if you have questions, please write them to the email that is, I will show you, to the emails. I will write you to the email webinar en at Finmaxbo.com. So over here you can see, I'm sorry, I will write one more time, webinar en at Finmax.com. In the subject of the email, just write to Alice, and I will respond to all emails. Okay. Thank you one more time for your attention, and meet you next Tuesday on the second part of this series.